Hey, thanks for checking out this video. Just wanted to jump in, do a quick little video. I had a longtime investor shoot me a text the other day and said, "Hey, I've had a really good 25. I think I'm looking at a big IRS tax bill come April." He was wondering if we had any deals that he could jump into and offset some of that tax bill. I'm telling him, of course, sure. We're always looking for ways to help our investors. And what a lot of people don't realize is that you can jump into one of our deals and you can take advantage of what we call depreciation. So, depreciation is basically the fact that properties lose their value or you have to put more money in or etc. over the years. So, the IRS gives you a tax break on that. We take it a couple of steps further because some of those things that you have in a house, your appliances, your flooring, etc., all depreciate faster than, say, your walls or your foundation or etc. So these things can be put into what's called a cost segregation. Don't need to get too far into the weeds to that, but it allows us to depreciate those things that break down, fall apart, have to be fixed faster. We actually get to depreciate those faster. So it gets us to be able to put a loss on things that are falling apart sooner. It's not really any kind of crazy loophole or anything like that, but those things lose their value faster than the walls. So we do a cost segregation. We get to bring those depreciations forward and get a bigger depreciation up front. This isn't like some strange, crazy thing. There's no danger of going to IRS jail or anything like that. Just think of it as a way that allows you to take more deductions on your taxes. Just a little note here, like there's a setup. We have to be a general partner, limited partner, passes through the entity that owns the property, and then end of the tax year, you can get a K1, shows your losses, all on paper again, just from those bonus depreciations. But one of the key things is you have to make this move before the end of the calendar year, 2025. Not really any if, ands, or buts about that. If it's January 1st and you're not fully signed up, it's not going to work. IRS just will not let it go. So I did want to point out that there are a couple of deals that we could do this on right now before the end of the year. One of the reasons that we can do this is because we've acquired these assets earlier in the year. But like I said, this longtime investor of mine hit me up, said, "Hey, I think I'm going to have a pretty big tax bill in 26 for 25. Like, is there anything I can jump into?" And I always want to try and help people out, make things work. So we've got a couple of assets already owned that we can convert into these GPLP structures in order to be able to pass on this depreciation to everybody. So we bought these assets this year, which is kind of key because before January 20th, bonus depreciation was limited to 40%. And then after January 20th, with the passage of the big beautiful bill, bonus depreciation came back to 100%. So that means that if you make a investment with us before the end of the year, you can take 100% of that amount that you invest and expect that as a write-off on your 2025 taxes come April or maybe September, depending on how fast we get our K1s out. You can plan to take that as a deduction on your 2025 taxes. So we've got this asset here, 335 Wild Horse Circle, kind of a mountain house just outside of Boulder, Colorado. Super dated. Previous owner built it in late 70s, early 80s, lived there her whole life. Husband passed away. She was getting up in age and wanted to be closer into town, not have to deal with snow, etc., etc. Perfect fix and flip. It's going to be a big remodel. It's going to be super nice, and we're right in the middle of it. So you can always already see that things are going if you want more information on it. The other one we have is kind of the same deal, but it's in the town of Boulder, kind of a legacy asset. Um, Family member passed away. The inheritors of the property just wanted to sell it and get out from underneath it. This one, again, is kind of right in the middle of the process. If you want more pictures, more information on either of these assets, happy to send updated pictures. We're in the middle of doing rough systems on this asset at 1025 Edinburgh Drive in Boulder. Again, just want to point out, has to be done before the end of the tax year, end of the calendar year, 2025, to be able to be applied on your 25 taxes to reduce that big bill that you think you're going to have come April 15th, 26. Again, quality assets, I think they'll sell just fine, even in the market that we have right now. Everybody really wants to live in Boulder. These are two unique assets. 1025 Edinburgh property is right across the street from school, down in South Boulder, close to everything, outdoor activities, good schools. Can head up to Pearl Street, hang out, all those kind of things. Wild Horse asset, kind of up in the hills. Nice little retreat, quiet, great place for somebody to relax after a long day at work in Boulder or Denver. So you can always get somewhere from any of these assets. Again, we've been doing these fix and flips 15, 20 years, Denver Metro. Got a good crew. They're hustling on getting it done. Should be ready to go back on the market first thing this spring, this in 26. So you don't even have to part with your money for too terribly long, hopefully. And if this is something that you think you're interested in, I'm happy to share more info. Jump on a call, shoot me a message, whatever makes you feel comfortable, get back to me. But got to be done before the end of calendar year 25 in order to offset your 26, your tax bill that's due in April 26th.